This is the EFI strategy by Erasmus himself. It costs about $100, or you can just watch this video. It's a very powerful strategy. It works like a hybrid. It trades with everything that you know, your CFDs, your currencies, and so forth. Let's dive straight into today's video.
In life with Montevino Valentine at Pride FX on Mobile Mondays.
Welcome to another week with Montevino Valentine. I'm the co-founder of the Pride FX movement. Now, before we begin, I'd like to ask you to please subscribe, like this video, turn on your notification bell so that you do not miss any other video that we do release. Okay, so today we are reviewing the EFI Erasmus strategy. It's very powerful, and I call it the hybrid for one reason. It's because it works on everything. It works on CFD, it works on your currency pairs, it works on Bitcoin, it works on binary.com that we're all accustomed to currently. Now, what we're going to do today is speak about it, give you a breakdown of it and how it works and how you're supposed to use it. Okay, then we're going to show you how you can enter as much as possible with this strategy. Now, before we begin, I'd like to tell you what it's powerful and when to use it. So when you use it, basically use it on the 1 hour time frame going upwards. If you are a scalper, this will not work for you. Do not go down to 15, 1 minute, and so forth. Yes, it does give proper signals, but it does not work because we're relying on the trend of the market to give us the best experience of this strategy. Okay, so from 1 hour up to your daily candle or your weekly candle, you can take trades from there. Now, like I said to you, it works best on the 1 hour and you can trade any pair that you would like to trade. Okay, let's dive straight into today's video. So the first indicator we are looking at here is a moving average. So I'm going to click here and I'm going to show you what you need. Okay, so you're going to use period 12. Your shift should be 0. Method should be simple and you apply to close. Now, when you come down here, you're going to see that there is pixels, which I have chosen 4. You can decide how visible you want to see this moving average. And then also you can choose your color that you would like to see on your chart. Okay, so how does this work? So what we are looking for basically is where is the trend going? So you know when you use your trend line, you're thinking of respecting an area, or if it breaks that area, it needs to go in that direction. So for this moving average, the only thing it does is give us a signal on when the thing is breaking the trend. Okay, so we can see a lot of reversals when we start looking at the moving average and the candlestick. So for the first time, we can see a sell opportunity when the candlestick breaks through our moving average. So you can see down here below, and we can see that there is a possible reversal which did happen until this point. So now if you have taken your trade, normally what I do tell my people of Pride FX is to lock your profit as much as possible so that you do not get stumped out, because when we look again, we can see a long buy candle come up, pierce through, and the next candle coming back down is a sell candle. So we can see basically why it is important to lock profit afterwards. So now we can see that there was a pierce here, and most of us would have taken this trade. I myself would have taken it, but we can see that this was only a leg, okay, to create an M. And we can see that from that point, when we pierced the moving average again, we went down to this point. Okay, so locking profits is important. Now we can see that there was a consolidation period, and if we move a bit across, we can see another sell happening here, and we can see it going down. So what I would tell you basically is not to focus on what is happening. So if you have taken your 1 hour trade here, move to a higher time frame so you can actually see what is the overall trend. So this is basically just for us to enter. So if you're looking here, we can see that this was a sell and it went nicely down. Okay, so if you were on a 4 hour, you would have anticipated this as a retest, and we can see it moving down. Now, when we come along this side, we know on the 4-hour or on the daily chart, it is a sell trend. So we could have taken this sell again. And we can see that repeatedly happening over a few trades. So here is another sell. Here is another sell. Here is another sell. And we can see that it's respecting the trend until we have a bullish piercing candle and we can see it moving upwards. So basically our moving average is for that purpose, okay? It's for the purpose of finding the trend. So we can see when it pierces the trend, we have a buy trend. And when it pierces the moving average for a sell, we know it's a downtrend. So we can see that from this point onwards, our 4-hour or our daily chart would have told us to continue holding this trade until we have another pierce over here and we can see a sell trade happening. So we can see over here, here is another sell. And when we move along, we can see that we could have taken more trades depending on what the trend was for that time. Okay, so basically get yourself a proper analysis on your daily and on your 4-hour chart to know what direction you need to take. Okay, so basically that's it for the moving average. Now we're moving along. Okay, so this is my Bollinger Band, and what we're looking from the Bollinger Band is exactly the same thing that we were looking for in the moving average. What is the trend? And when we look here, we can see a pierce, a retest, and an upward momentum of a buy trade. Okay, so we want the Bollinger Band not to be within the candlesticks as we are used to using. So you know where we would put the Bollinger Band within the candlestick, and we would give the parameters for that candlestick not to pass by, and we would take a sell if it touches our upper band, and if it comes below that point, we'll take a buy if it touches our lower band. Now what Erasmus has done so wonderful is that he has put the Bollinger Band below or above the chart, okay, to give you the trend of what is happening. So here we can see a pierce, a retest, and a buy trend, okay? So you could have made a lot of money if you just do exactly what I'm telling you. So basically, if you're seeing a buy pierce on your Bollinger Band, you can take a buy trade, okay? And if you're seeing a sell pierce, like the candlestick below, you can expect a sell trend. And we can see this happening over and over as we're moving along. So we can see here is a buy pierce and we can see it going up. And when it comes below that point, we know it's a sell, so we take that sell. Now, obviously here was a retest and we can see a pierce and we would have taken that sell. So the more you practice this and you know the overall trend, you can take a trade depending on what direction the pierce has occurred on either your moving average or on your Bollinger Band. Okay, let's dive to the last one, which is your envelope. Okay, so this is our envelope. Now what we use the envelope for is the same thing, okay? It's basically the same thing, and what I like about the strategy is that it's a repetition of all the indicators doing exactly the same thing. It's not like the others that we are currently used to. It does exactly the same thing over and over and over. So we can see that when the envelope is above, okay, it also tells you when the market is consolidating. So you can see from this point to this point, there was a respect within this envelope. That's why there was no trades confirmed. But when we had a trade, we can see a pierce, a retest, and the same thing applies. Okay, now you can see that there was an uptrend, and when it pierced our envelope over here, we could have taken a sell. So you can see that with the moving average and the Bollinger Band, it never told us that price is consolidating. And that is what I like about this one, is that it tells us when price wants to consolidate. So you can see when the envelope is opening, we can see a consolidating period, and when price breaks that consolidation, we can take a sell and we can take the downtrend. Now that's the nice thing about the envelope. It tells you when to buy, it tells you when to sell, and it also tells you when the market is consolidating. Okay, So let's dive straight into the last piece, which is putting all of them together and how perfectly they work. Okay, so I'm not going to pause the video. I'm going to add them immediately so we know it's the Bollinger Band, and we also know that we need our moving average. So let me get the moving average, and this is the moving average, and so now we are done. Okay, so now you know that there are 4 ways to enter with the strategy. Now you can use the 4 ways or you can use the last way. Okay, so the 4 ways is when the bullish candle pierces through the moving average, we know it's a buy. When the envelope pierces as a buy, we can take a buy. When the Bollinger Band is pierced, we take a buy. Now that's the wonderful part about this, is because when all of them are pierced, you have a perfect confirmation of a buy trade. So you can see over here, we had that pierce, and we can see that from that point onwards, we were going up. Okay, so how would you take a trade on all of them being together? So what you'd need for it to do is the last Bollinger Band. So the lower Bollinger Band needs to touch the lower envelope. So when they touch each other, you can take a buy trade. That's a confirmation of an uptrend. Okay, and when we move along, we can see the same applies over here. So when the upper Bollinger Band touches the upper envelope, so this blue, the dark blue, and the black Bollinger Band crosses over each other, you can take a sell trade. Now you can enter 4 times at the same time. So what do I mean by this? So if you know, let me just go back. So if you know what is happening, like we've explained to you what's going on, you need to first look at what's going on. Okay, so I can see a pierce over here with my moving average, which occurred there. So I take my first buy trade. Okay, now this is not advisable. This is what I found to work for myself using this strategy. So I take my first buy trade over here, and I'll wait for that to happen again. So we can see our Bollinger Band has been pierced and our envelope. So I can take a double trade over there. So that means I have 3 trades running. Now the last confirmation I need is for my envelope to touch my lower Bollinger Band, and that occurs. So I take another buy. Now I have 4 trades running into profit. Do I take any more trades? No, I don't. The reason why is because we know it's an uptrend and we're waiting for a reversal. So you can hold that 4 trades for as long as you want. Now let me give you a sell setup, okay? So for the sell, I will first focus on my moving average, okay? Because the moving average is the fastest one out of all of them, okay? So you can see that there was a pierce on my moving average, so I have taken a sell. The reason why I've taken a sell is because, like the strategy explains itself, is that when the moving average is pierced, we know we're going in a downtrend. So I have taken a trade here because I know for a fact that my moving average has been pierced. And when we're looking at this, we know that the consolidation period is over because price did not respect my envelope. So we know that coming back down, it's going to make a reversal. And we can also see that there's a M formation currently occurring over here. So I take my first sell trade and I wait for it to pierce my Bollinger Band and my envelope, which is a double signal for 2 trades. So now I'm running in 3 trades. And when my envelope touches my Bollinger Band, I take another sell, and we can see what happens after that. So we can see that there is profit, okay? So let's look at another 2 examples before I close off, okay? So basically, here is a buy, okay? We know that that's a buy. So we take a buy, and then we see that it pierced both. So we take 3 trades. Now remember, like I explained to you, is that you need to first put all the work in, okay? Now you can see that over here, I had a pierce and it went up to this point, okay? And then we can see that coming back down, we had a pierce over here. So I'd have closed my buy trades, and when it pierces over my Bollinger Band, I'd have taken a sell, lock profit, wait for the envelope, and boom, we can see that that was a perfect trade. Now over here, we can take a buy trade, we can enter, and obviously it never pierced there, so we know that the price has been respected in this area, so I would have closed that trade. And then coming back down, we can see a pierce through our moving average, and obviously a pierce through our Bollinger Band as well as our envelope. So what I would have done in this case is take a sell, log profit above, place my stop loss above my Bollinger Band and let it play out. Okay, so you can see that after that we had a beautiful sell trade. Okay, so let's dive straight into the settings. So for your envelope, your period is 12, your shift is 0, deviation is 0.100, method is simple, apply to close, and you want both upper band and lower band to be the same color. Okay, and then the last one that I did not explain to you is the Bollinger Band. So you want the period to be 20, deviation to be 1, and your shift to be 10, apply to close, make it the color of your choice. Okay, so basically that's it for the EFI strategy. It's very powerful if you're looking at it on a higher time frame. If you're going to scalp with this, I'm not sure if it does work, because I've tried it and I found that the best time frame to use is the 4-hour chart. Okay, so basically that's it from me, Montivino Valentine, signing out from Pride FX.
In life with Montivino Valentine at Pride FX on Mobile Mondays. Mobile.